Well, that last part needs to be fixed on that intro, but that was our new intro. Just created that yesterday, actually, on my glorious Sunday. Welcome to another Flash Hour Live as we go through exactly what Flash has got this week. So if you're new here to Flash Hour, we go through State of the Trenches, just allow everybody to funnel in. And then we... not audible. Oh no, it's not audible at max. Uh-oh. Can you all hear me? No, you can hear me. You can hear me, right?
Yeah.
Okay.
A little bit.
Am I really?
No. It's not good now. Yeah.
Okay. But as long as you can all hear me, the chat, drop me a comment here and see if you can actually hear me. Test 1 2. But the big thing for Flash Hour is we go through State of the Trenches, allows everybody to funnel in for a little bit, and then we do what we got done this week and what is coming. There is a little section there, Flash Overview, where we like to highlight exactly just something that the team wants the community to know about. We want to give a little extra attention to. So with that being said, there he is. The two co-founders here, Nelson Zabe. Is he finally here? We got him. We're in.
We've got a new name here. It's like wartime container.
GM, everyone.
GM. All right. Just so we can allow Zahaib to settle in here for a little bit, I'm going to ramble through some of these. This is a lot to get through. A lot did happen. My main focus, though, this week, and what I really wanted to kind of like articulate is the fact that institutions are really, really here. And we are just absolutely accelerating in that direction. There is no slowing down now. They've realized the power of blockchain, and we even have institutions fully spinning up their own blockchains, Robinhood. But we'll see how far that lasts. That closed ecosystem, we'll see if that's a continued trend. I'm not totally opposed to it, because it's like we have our decentralized public option, which would be Solana, and then there'll be specialty chains like Robinhood that are more corporate enclaves. So potentially actually both live in symbiosis with each other. Could definitely turn out to be an interesting paradigm. Something we weren't anticipating, but does look like it is happening. Solana's total tokenized equity value reaches a new all-time high. Again, I literally bring this to you every single week. $535 million. Solana perpetual dexes generated 1 billion plus in 24-hour trading volume. So these are, I would say the DEX wars are getting spicy. Solana extended its leadership in RWA adoption, crossing 300K holders. Big deal. Ethereum's obviously the Goliath in the room when it comes to almost everything. But it's slowly being eaten away, and I see a massive narrative switch away from Ethereum, as well as the Ethereum founder himself has basically said that sharding, not a joke, sharding is dead. So no more sharding, guys. SBI Global Asset Management launched JX via Digi FT, which I guess would stand for FinTech, bring tokenized Japanese listed equity strategies on chain. Again, this whole focus is that institutions are here. That's what that was for. And just a little fun shout out to our Claynosaurus brothers. If you're an NFT holder, they began streaming on Amazon Prime Video. Super cool to actually see that on Amazon Prime. And the cool part is that if you are an NFT holder, it actually is kind of like I think there's sharing rev or something like that. I'm not sure. Or royalties. Something along that. I doubt it's going to be anything significant. So don't go spending a crap load of money on a bunch of Claynosaurus, because I think we've seen this kind of thing before. It didn't exactly play out to the holder's favor. So don't go crazy. But maybe if you like Claynosaurus, buy one. Or if you're holding one, maybe it's a little boon for you. Anza announced a bug bounty program ahead of mainnet transition to Alpenglow consensus. So big deal. Big deal for us. Maybe if there's some developers in the space as well, it's a really big deal, actually. Yellow deployed its trustless settlement infrastructure for AI agents on Solana. This is the only place for AI agents. Sorry, it's a fact. I was working with a company for this, Trustless, which we are building AI infrastructure, and any other chain is you just can't do it. I mean, honestly, the biggest thing is like that 200 milliseconds actually a lot better too, because even Solana right now is actually a little slow for a lot of things that need or that AI would use it for. So now with the Anza upgrade with Alpenglow, it'll be even more serious. Semi-Poxy, I have no, the Sempoxy, I don't even know what that is, signed an MOU, Memorandum of Understanding. So to offer fractionalized ownership. Oh, this is the Egyptian land. Yeah, that's a little weird. I put this on here because it's a little bizarre. Like fractionalized land in Egypt? Are they selling like the desert?
Parts of land.
Parts of the desert?
I think,
they're like, buy it online. Stuff. You go to visit and it's in the middle of the Sahara Desert. I think you're wait, what? I thought this was flourishing land. It is flourishing with sand. Trade Neutral launched an options market, making your vault curated by. So, this is the delta neutral strategy. So this is like also actually what flash.trade's working towards, but this is a delta neutral strategy that they're going for. High low did the same. No, it's not the same thing though. Yeah. No. Just the same general idea of like staying delta neutral. I have no idea with, security, with safety, all those things are up for grabs, but that is what they're doing. High-Low introduced the EHYUSD as a fully delta neutral yield bearing asset. So this is actually, my guess is that's actually like a tokenized delta neutral thing.
Yeah, it's like the stability pool. I didn't get a chance to get much deeper into it, but they are expanding more assets. Yeah. So basically, you get an exposure to position that doesn't get liquidated, but you do get to lose a lot of money when things go against you. A lot of people have experienced that with their XSOL.
Impermanent loss.
Flushed out. It's not impermanent loss. It's like holding a 3x position while the market is going 50% against you. You usually lose a lot of money, and that is what happened. But overall, they didn't go in debt. That was very important. But it's like a very important lesson for a lot of people who don't understand markets. They were like selling it as something does not get liquidated, but it did vaporize your portfolio.
Yeah, I was about to say, it doesn't get liquidated, but when you have 2 cents left and you're not liquidated, you're not very happy either. So it's basically like getting liquidated. All right. Well, lastly here, it's 3 of the big things at the very end. Rug Checker, actually, I really, really like that guy too, the developer. Rug Check really shipped a major upgrade featuring instant token risk scores. So they've been really heavily working with RPC providers to provide that like instant, my dog, I apologize, that instant, information. I can't remember the RPC guy. I really like him too. I follow him on X, but I guess they've been kind of working hand in hand together to really offer that like real-time feel for Rug Check. So Soulflare launched a 25% discount campaign for Breakpoint 2026 tickets. That is in London. If you are headed to London, get your tickets through Soulflare. It's Pretty dope. Actually, a pretty good deal. Credible ICO on MetaDAO receives 32.7 million in commitments. That is what I like to see. Ownership tokens taking off. So congrats to Credible for that successful raise. That was a really awesome. It's just, I like seeing MetaDAO getting adopted. They're pushing the industry in the right direction through actual on-chain ownership, which is really nice. Sure. All right, into the big announcement of the day. I guess it's like big. Security overview and the safeguards that we are putting in place. It's limited rate of outflow per hour for program custody. So that is the headline that we wanted to lead with today. As you obviously are active on X, that's probably how you're joining us right now. You did see that there were some exploits and some issues with different protocols. And we wanted to make sure that our community understands and knows that security is top of mind and that we do not take it lightly. Anas, did you want to take it from there?
Yep. Last week we saw a very big hack with Ostium, which is one of the perps on Arbitrum. So they were a bit of huge in the RWA sector and had open interest reaching about $100 million. And the total loss was about $23 million. And we've seen increasing number of hacks over the last week. And I think it's important we highlight on the security systems that we have at Flash that basically makes things much more, secure, because audits are one thing and building a secure infrastructure is another thing. So audits can always miss a lot of things, and we have seen time and time that like every protocol has been audited. It's not like majority of them are, but they still get exploited because there are some other nuances that float about, and we really wanted to highlight on how we look on this security angle, where we basically are looking forward to add this limited rate of outflow from the protocol. So basically the idea is to jot down and find all the ways from where the money can go out, and then have this limited rate outflow system on every possible outflow parameter. And basically this gives you if an amount that could be lost in an hour. So that's about $100,000, which is the maximum hit we will take if something goes wrong, which is a very neat approach. And I think Zohaib can explain more on that as he is working on it.
Yeah, for sure. And actually, I wanted to go a bit deeper on current architecture and current safeguards that are in place, and the improvised system that we are working on. And outflow limits, I think that has been a point of discussion across the board, because you never have genuine use cases or genuine flows or user flows which require millions of dollars to be moved in a single transaction, or in a second or so. And then that's an enhancement to the system that we have already. So we'll begin with a bit more context on the current safeguards, and then I'll dive deep into what we are working on actively, and kind of explain our thought process and our engineering effort behind fine-tuning the safeguards, such that even if Oracle infrastructure is exploited in any form, which right now is a lot more robust than whatever we have seen getting exploited across the board. But even then, let's say PIT as an external Oracle provider for us, if they suffer an incident of security breach on their front, our systems should still be resilient. So that is what that's the depth of security overview that we have had over the week, and the safeguard that are coming up. Max, maybe do you want to bring the report up, or?
Absolutely. There you go.
All right, that report just kind of makes the flow a bit easier for us. So yeah, these are systems that we have already, and they kind of start off with the idea of um, you know, two sets of different users that interact with Flash, that are traders and liquidity providers. And then like both of those surface vectors have their own attacks that are possible, and things that are configurable on our end to prevent any sort of shortcoming on our end. So the complementary set of like safeguards on the liquidity side or liquidity provider side is like first off we have a price bound on the liquidity provider token. So even if like there's an oracle manipulation or any sort of a different vector that can prop up the price of LP token, whether you have existing liquidity provider and you can withdraw at an elevated price, that this program kind of have built-in mechanism to detect the price that the LP token is being redeemed at and block the flow. So that's like one of the first vectors that we covered, and this system has been live for like months now. The day we introduced FLP since then. So it's like 18 to 20 months of this being in operation, and it's served us well. Few incidents of a confidence interval breach, and a few instances of like downtime is a consequence of this, but we kind of uphold the system. We always have strict thresholds on the redemption value of liquidity token that can be like redeemed for underlying tokens on the pool. This is like the very like limited safeguard that kind of prevents any sort of exploit from like redeeming millions of dollars for a few dollars worth of liquidity tokens. And then like that's the crux of what we have on the LP end, alongside all of the obvious safeguards that we have around Oracle infrastructure. We use PIT, Laser, Oracle infrastructure, which is now Pith Pro, and it has like like baked in signature verification format, which is one of the best in the industry. So every signature verification from proofs generated by Pith is done on chain all the time. So one, it remains permissionless and censorship resistant, even if the Flash team does not operate any of its infrastructure. People can still get a paid subscription, pay the or kind of take the payload and verify the price and update the price themselves. That's both resilient to exploits and also permissionless and censorship resistant on our end. So that's the crux of things that we have on the LP side. On the traders front, obviously Oracle infrastructure carries forward. We have the same protections for trade or mark prices for trades that we have for liquidity providers, but we also have position wise isolation. So every position has a limited payoff that we honor. So a given position could only end up realizing profits up to a predefined threshold. And some other protocols kind of put it out as automatic deleveraging. For us, it's less of deleveraging and more about identifying an ambiguity in payoff. Like there couldn't be a position which puts in a few dollars or maybe tens to $100 collateral and then gets away with $1 million. It isn't a trade that's possible given normal circumstances. So we identify exploits using payoff that is not supposed to occur during normal market conditions. So like this is a big way for us to isolate risk from individual positions. But then again, because we are DEX and people wouldn't be limited to number of wallets that they can interact with, they could use a variety of different wallets and kind of split their attack across a fleet. So we also have a universal OI limit right now in place across each individual market, which doesn't allow positions to be executed at once, exceeding a predefined threshold. All of this is available as part of our docs, and it's also visible on the UI. If you kind of try to take a trade, we show the amount of liquidity that's available, kind of takes all of this into consideration, and we isolate like token accounts at each level, which is what we are highlighting here. So if you scroll down, we can dive a bit more into the LP side, and then come back to the traders. And so here we have the minimum output authentication, where you have slippage thresholds defined by users, so you don't get like an unexpected amount when you execute a transaction. Simulations were working fine, and now that we have ER, or ephemeral rollup based execution, we still have a bit of work left with wallet providers to enable simulation output and results. But even then, like, we have strict thresholds on the amount of token you receive when you do an operation. That's predefined at the client level, so it kind of makes it easier for you to predict what's going to happen. You'll not see any surprise when you execute the liquidity redemption or addition process. And we also have limits on the pool. So vectors kind of work both ways. One is like existing liquidity provider, or an exploiter enters through the normal route, and then when they try to exit, they inflate the price and exit, or they could just deflate the price beforehand, enter the pool, and then withdraw as a normal user. So we cover both sides by like also having static thresholds on the maximum equity or USD value for a given pool that we have, and that kind of prevents extreme skew from just messing up with the pool's equity. And on that same front, we also have token ratio guards, which has also served as well in terms of like, if you remember the pool that we wrapped up with Remora assets back in the day, that we offered equity perps over Remora's set of assets. We had an exploit on our providers, and the pool went like unheard. Or there was like $0 loss on the platform, because we had strict controls on token ratios. No one could just dump all the tokens and take USDC from the pool. We have like strict defined thresholds on each token and the ratio of token that's represented in the pool, and it cannot be breached by any form. So even if you have
I
tokens
think,
being taken out,
We're the
the
ones who
system
save.
was,
We're the ones who save them too. By the
we
way.
actually saved a lot of money for Remora team because of
Yeah.
our system. Yeah, yeah. They're able to recoup a lot of money.
absolutely.
Maybe
These were systems that have been in place for months now. So we've had the experience of running these systems over a few incidents that have happened, and these safeguards have helped us make sure the protocol stayed solvent any position. And what's more is like we also have a few $1,000s left on those pools even now. It's been months that the exploit has happened, and we still honor withdrawals or redemptions from the pool. So whoever has funds, yeah, please, take your time and withdraw those. But yeah, that's the proof of all of the systems in place, which kind of validate that no extreme condition could break the invariance that we have for the constraints on pool liquidity, and also the overall operation of the platform. So that's like the overall surface that we have in terms of solvency for pools assets for liquidity providers, and it's been serving us well for all of the time that we've been live. Um, it kind of just covers up all of the things that we have in terms of LP ownership. I think token ownership and other stuff people are quite familiar with, so we'll leave that
I think
part to.
the hardening part is something that I really want to highlight, which is about the receipt architecture, where we would be basically limiting the outflow per hour, no matter
All
what
right, yeah.
happens. Even if there is an admin key leak, which has been the case for a lot of protocols of late. This system would basically guarantee that the maximum loss in that hour would be about $100,000. This is something that I wanted to really share and get a check mark from user that this is gonna be what
Yeah.
you deploying on Flash to make it secure.
Yeah, for sure. So given that the current constraints and architecture is what we have, then we look at the current slide that we have here. Uh, what we have had up until now was atomic execution of every transaction. Right, when liquidity providers came in, they deposited funds and then got the LP token minted in the same transaction. All of this was quite good for composability and expand and kind of supporting integrators across Flash's liquidity pools, and that has worked well. With our migration to ephemeral rollups and the speed execution and lower latencies that we enjoy today, we've also had to make a conscious decision of splitting the flows into token transfers and all other validation. So when you try to deposit liquidity today on Flash, you see like a small SOL fee being charged, which is again returned to you in a transaction that follows the execution in a circle. So what happens here is your tokens are transferred, or if you're trying to remove liquidity, you burn your LP token and create a receipt. This receipt is what carries information between Solana mainnet and the ephemeral VM that we have with Magic Block. This is a necessity in terms of designing the architecture to prevent front running, but it also served a great purpose of isolating risk. So nothing is atomic. Even an exploit transaction can't just withdraw funds directly from the platform. They have to go through a reset pattern where first transaction kind of creates a request, and then a follow-up transaction is executed on the ephemeral VM, where everything is validated, and it's all on program. So there's no like additional environment or logic which is outside of the on-chain program binary. It's all embedded. It's just a different environment that this get executed in, and all of the validations are made. And if everything is appropriate, we kind of have the receipt return to execute a transaction that follows up to transfer the actual tokens. So at this point, now we've got a guardrail which can be placed to make sure that the hourly outflow rate is computed. And it's all on the program. So there's no additional service that is required to process it. Every transaction that touches custody token accounts or vault token accounts, or like as you people usually refer to them as vaults, which are just program specific PDA owned token accounts, which authenticate transfers. So whenever you transfer or have liquidity deposited, or your USDC or any other tokens deposited to trade, all of them go through a transfer process, right? And that's a bottleneck, and that is where a lot of protocols that we've seen in DeFi don't have much authentication involved. A token transfer is supposed to be a simple thing. Either have tokens transferred from user's wallet to the platform, or in reverse, like whenever user requests to withdraw, we just have tokens transferred from the vault or program owned token accounts to the back to the user. This is where we're putting up a solid system which checks two things. One is like an hourly notional USD limited rate flow, which
For
identifies,
every
okay,
token.
every token.
Yeah.
Like if, like let's say if you're talking of $100,000 in aggregate, we don't want more than $100,000 flowing out of the platform at once without an additional validation. So let's say, yeah, there could be LPs who have deposited hundreds and thousands of dollars, or maybe $500,000 or $1 million as a single liquidity provider, and you're willing to exit the pool. At that point, we do have intervention. So an admin keeper can come up and validate that this transaction is filling all our safeguards, and then submit a proof for it that okay, this is no foul play involved, or even the admin wallet is not really compromised. And we also have like a multi-sig control on program native configuration changes. So it kind of tracks, okay, how many admins approve of this kind of withdrawal, which is exceeding the set limits of $100,000 an hour. And once all of that is authenticated, we can let the withdrawal be processed. A normal flow, which is within limits, has like no such a requirement. It kind of creates a flow, and if it's within our limits, we do allow all of the execution to just happen permissionlessly. So it's the best of both worlds. We have the same experience as we do now for normal flows, and then if there's
Yeah.
an explicit withdrawal of a large value or maybe a potential exploit, then we can act in time, and stop the funds from being transferred. So it's about being proactive in limiting the damage if ever an exploit is to occur, and then like prevent loss of funds, pause the protocol, like whatever happens after an exploit, we can do it real time, while we assess the impact and kind of protect funds before they're lost to exploiters. This is a challenge which kind of, it's just across a lot of protocols that we see. Borrow lend protocols like Camino have been having these thresholds put in place. But what's unique with our case was, if we ever have an Oracle exploit, let's say if someone gets hold of being able to spoof price, which is what happened with Ostium, sadly, even with, let's say, all of our safeguards put in place to prevent malicious Oracle writes, if at all that is to happen, people could just manipulate the price of a token, and maybe the protocol doesn't even estimate the right value of a token. They could put Bitcoin to maybe $10 as they
Yeah,
did
I was
with
about to say at
Ostium.
that point they couldn't, right? I mean, there's really no way to safeguard against that. Well, I'm saying like the actual complete manipulation if you can't
But
actually read it.
yeah, we've still thought it through, and that's where we want to go an extra step and say we're trying to protect that as well, where we put
Yeah.
in token amounts. It's an active admin management. Like there's a lot of active involvement now, and thanks to AI and all of our autonomous bots, we can do a lot more. We need not be on the desks all the time. There could be a lot of static validations which can be run via agents. And yeah,
Yeah.
agentic finance isn't just about users. It should also be about protocol safety,
Safety.
Security.
and admin configuration. So that's what we've been putting in place here, where even if Oracle manipulation is to occur, we would have standard token amount limits, which are enforced per hour. So Bitcoin couldn't move by maybe like 20% over an hour. That's
Yeah,
like
exactly.
that's an estimated computation that I'm talking about. We have like a lot more deeper analysis over this, but just like talking in a general sense, you don't expect that to happen during a normal case. So you can now
Normal trading
estimate.
session.
Exactly. So yeah, maybe like $100,000 or bandwidth around that. You could have maybe 2-bit BTC as an additional limit that you enforce, making sure that if an exploit is to ever happen, people should still not be able to withdraw more than 2 BTC in a given hour, and that's computed all real time. So the program is validating a real time accounting ledger of how much funds are flowing in and flowing out, both in USD terms and then also in token terms. So we can kind of cover the surface in such a way that we have no possible vectors where a lot of funds move
It's
out of
like
the protocol at once.
it's like a bank policy. Like even with banks, they
Yep.
have like a limited amount of fraud that can happen, and that fraud is something that banks can cover, and that's what we are looking at here as well, where we know how much amount we can cover, and that's the amount that we can allow instant withdrawals, and make sure even the bigger withdrawals can happen faster thanks to the agentic flows, which will allow things to happen faster. But that is for later cases, because first we need to add a couple of more speed breakers to make things slower, and then once we are confident about how the speed breakers work, then we can kind of make things a bit fast for people to withdraw the legitimate amounts.
Yeah, I mean, I know that there's been like an ample amount of effort with like transaction simulations with post and pre. It's like I mean, obviously Zahabe does Lighthouse with the post assertions and pre assertions. So I know there's been ample amount of effort gone to it, but we're taking it to the next level. I mean, I didn't even know, and to be honest with you, I didn't know it was this in depth. This is like absolute next level security safeguards for our users and for the protocol. So this is really awesome here. I'm getting educated too.
Yeah, and one thing with protocols like Lighthouse, which sit outside of the native program,
They do, yeah.
we can't enforce. Let's say an exploiter could bypass that. Like it's more or less for people who are interacting with wallets. So wallets kind of enforce this additional instructions via Lighthouse that do instruction introspection and see, okay, it's more or less like a wallet level safeguard to prevent you from clicking on like wallet draining instructions and such. So it's less of a protocol oriented safeguard and more of a user oriented safeguard. So yes, Lighthouse and services like those have been really helpful for us. Pre and post validations are great for new users who are trying out, let's say, newer stuff. But for us, like, we wanted to have like a program native solution for these. And these are some things that we have had in place for a long time. It just feels it's about time to make it a lot more robust or cover the whole surface you can think of before any incident is to occur. And yeah, manual audits and even formal verification proofs kind of miss these cases unless you identify the spec yourself or you kind of elaborate on this idea of, okay, if any exploit is to occur anywhere in DeFi, you need to come back and assess the risk on your platform as well. So that's what we've been up to for the last week, and we've made sure we have all of the surfaces covered, and we have as many safeguards live as soon as possible. That's been the case for now, and we are taking it a step further, coordinating with a lot of people who've been integrating with Flash to make sure we have backwards compatibility and not break anything, and make sure we have the right surface covered to avoid any potential exploits in the future.
Well, that was actually quite enlightening for me reading through the HTML page that you gave me as well with just obviously I was sitting here reading it myself. I'm kind of like I say, the janitor here, so I'm not up to date on everything on Zahab's side. Wow, that was a lot more than what I was even anticipating myself. So really, really happy to see that we're taking it very seriously. And the reason I say that is because a lot of teams that even I deeply respect, like Drift, like DeFi Tuna, like Ostium, like there's a lot of these teams that you deeply respect. You think that they're on the ball, and it's not even like, it's no shade to them. It's just with the advent of AI, with things like, Fable and Mithril and all of these, it's going to get more and more interesting. So we got to really stay on our toes when it comes to security and obviously utilizing AI to do that. So happy to see that. But what we got done this week, 10 new equity listings. If you are not paying attention to the timeline, we posted those out. Lots of good equities went out. So if you're looking for the single place to trade for the most robust and thorough list of equities, flash.trade is a very nice place. It's very juicy for equities, that is. Up to 20x leverage, by the way. Duels comp finalized, and Ontiz, I'm really not sure how to say it again. I apologize. Maybe a Nos knows. I'm an idiot. He won. He took the top crown. And if you are interested in participating in another round of duels, we might have some things coming up, some things in the works. Not only from our side, but you can participate anytime with you and your friends, or you and somebody on the timeline who wants to call you out. Hardened V2 implementation safeguards. So we've thoroughly gone over that. Don't want to delve into that, but something that a lot of builders have been waiting for is builder codes and funding mechanism. I'm just kidding.
Indeed. Indeed. Safety first, I think that's where we've put bulk of our efforts in post migration. And yeah, we're kind of still ironing out flows or making it easier for people to trade and provide liquidity and cover the whole surface. So that's been the bulk of our efforts this week. Builder codes is something that we've wanted to kind of make sure we have the right architecture and the right implementation before we hand it out to integrators. We have spoken to a few teams that have been building on Flash, and we wanted to make sure we retained their current setup and not make it too difficult for them to start making a bit more capital from the payment for order flow that builder codes offer. So we've had the system up and being tested on DevNet, making sure all of our partners kind of integrate the flow. Because it's easier if we had a builder code built from scratch or something which maybe like exchanges like Hyperliquid offer, where builder codes create a completely isolated environment. So if you use Phantom, Perps, and you use Hyperliquid natively, you kind of see the difference between how those accounts operate. We wanted to make sure it's a lot more composable in nature, or a lot more universal, so people could switch vendors from a single account. So we've had a lot of interesting integrators like Imperial, for instance, who've done a crazy good job in abstracting the whole deposit and withdrawal process away. And you can also kind of interact with a lot of other exchanges on Solana through a unified interface. So the proposition of being composable kind of creates a bit more of a complex surface vector.
You're breaking up a little bit there, Zahid.
Yeah. Damn.
Well, we lost Ed. I think what he's basically just saying to say is that builder codes are on the way. It is more challenging, obviously, and with builder codes going out, we need to make sure that it's not exploitable, as well as keeping all the same. It doesn't open us up to exploits in some way, through the protocol. So this is why. Yes, it's frustrating. Yes, we've been saying it for several weeks. I know for a fact there's some builders that keep reaching out to me every single week. I get it. Keep checking back with me. It doesn't bother me whatsoever, but it is coming. It's on the docket. Don't worry. We are 100% working on it. And just like I say, making sure we iron things out. We're being extra careful because I think it's warranted. As you can see from the timeline, we do have good reason to be cautious. So, and that's exactly what we're doing here.
For sure. All right.
Absolutely. I'm sorry about that.
I think Zoeb's laptop is crashing out because he's running a lot of instances.
Yeah, it just happened to get my desk
Orchestrated.
So
Yeah.
hopefully it's a lot better now.
Oh yeah, it's way better. Yeah, much better. Your voice is really clear now too. So moving into the last section here, security safeguards. We got into that a lot earlier. Apologies for that. We're continuing to obviously build that out as we have gotten into, and as Zahaib said, we do have a lengthy history of already having quite a few safeguards in place for the last 18 months. So but we are also moving forward with, on the UI side, earn and token page UI improvement. It's a massive upgrade. I think some of it had taken a little bit of a backseat just
some of
for
it
a
has
moment.
some of it actually been pushed over this week. You can already check if you visit earn page, it actually loads up very, very fast. There is basically no lag. It basically aligns with what we have with the transaction landing system. So everything on the UI is being polished up. And I think the last thing that we can add is some more animations to make things a bit more smoother, because right now they are kind of finicky because things are they're very fast. So the finickiness will be fixed up, and then we'll have the smoother transitions in. So that is what we are working on the UI side. Next up,
Nice.
24/7 market is
24/7.
something that we've been discussing. Yeah, still digging through the nuances, because we have to make sure the details are ironed out, because markets get very thin over the weekend, and we can't give higher leverages when the markets are thin and can be moved at will. So that is where we are actively discussing on ways we can actually go ahead with offering 25/7, because the spreads get very wide and we have to be wary of those spreads.
Yeah, Big upgrade too. People don't realize like how much goes on behind the scenes when it comes. I didn't either until until Anas and Zaheb obviously brought me in, and now I'm a part of like the Pith channel. But man, it takes a lot more than what I thought. It's everybody's like, just plug it in. It's like plugging in a light bulb, or like a lamp. It's like, nah, it's not that easy.
It's not that easy.
Yeah, it's not even close. So yeah, there has to be quite a bit of evaluation. There's got to be risk. There's so much analysis that goes into one token being listed. Trying to streamline it is obviously, that's what we're trying to do here. But at the same time, you can't like lose the quality of all the safeguards you have in place just because people want things faster. You need to make sure that everything is all the was it I's are crossed and T's are dotted, right? Something like that. But other than that, I'm pretty sure that's it. That's the one. The good thing I'm not in charge of security. But other than that, this is Flash Hour. I'll leave off with the founders here to say their last words. Next week, just real quick before I let you guys say your last piece, next week you will see a new backdrop. I am moving. That's why there's so much noise in the background. Super big apologies for that. Nothing I can do about that. Today's move out day, I guess you could say. So next week I'll actually have my own office. So we'll be kind of decorating, trying to make the backdrop look a lot nicer, painting some things, getting some things just in order to make it look a lot more professional instead of just a white wall in my living room, because that is what is happening right at the moment. So next week will be cool. You'll be able to see kind of that little transformation if I put enough effort into it. But other than that, guys, what did you want to leave these good ladies and gentlemen with for the remainder of the week?
I think the most important part is security, and we are working hard to get a very neat approach on securing things. The idea is to make things so much hardened that even if the main multi-sig that controls the upgrade authority of Flash program gets exploited, there should be limited amount of money that goes out from Flash. Very tall ask.
Which is wild too, by the way, to say that. I don't know if you know, but like that's, for anybody who doesn't have that in place, it's completely catastrophic. In this instance, let's say the absolute worst was to happen, an absolute nightmare.
Exactly.
It would be bounded, which is freaking amazing, and it would give the team enough time to immediately address it. Yes, yes, it happened, but there's bounded losses, which is incredible. That's exactly the kind of system you want. Redundancy after redundancy after redundancy in place so that these actions can be taken quickly and without in the world of instantaneous things. This is exactly what needs to be in place, because it can scale that back from being an instant you're done and there's nothing you can do.
Yep,
absolutely. We do all of that while making sure we have newer features and newer listings flowing through. Again, if you want to see more assets, do let us know, and then we'll make sure we have them on as soon as possible.
Thanks, guys. And I will do my outro like usual, like you do. Oh, wait a minute. There's two of you. It's super confusing. All right. Well, thank you again for attending another Flash Hour. I really appreciate it. As you can hear, my whole family's here in the background. That's a background noise. I'm at a cafe. We'll just say that. I'm at a cafe. That's where I've been doing this whole time. Just at a cafe. So next week will be a lot quieter. Will be a lot nicer because I'll obviously have my own little nook, my own little office, and we'll have a much more calm Flash Hour. But if you guys want to see any new listings, obviously hit us up. We're always reaching out, trying to figure out what you guys want to see next. That was the last tranche of 10 assets that were listed. Those are the highest, most requested assets, either in our Discord or on X or in our private DMs. or from the team themselves who really wanted to see specific listings of different equities. So keep those coming. We really appreciate the feedback on the listings. We're going to keep rolling those out as time goes on. Hyper focused on security, hyper focused on creating the most effortless perpetual trading platform in the Solana ecosystem. And we do it all for you. Thank you for attending or I would say this Flash Hour. And of course, like always, I'll see you in the markets.